For insights on 17 financial markets across Africa, read the Barclays Africa Group Financial Markets Index 2017. Know no boundaries and prosper.
And welcome to the special CNBC Africa broadcast. I'm Nozi Pombanjwa. We're coming to you from Wits Business School, where we're having a conversation exploring the opportunities and the challenges to expanding and deepening Africa's financial markets. And of course, this is on the back of the recently launched Barclays Africa Group Financial Markets Index in partnership with the Official Monetary and Financial Institutions Forum, also known as OMFIF. And in this conversation, we're going to be exploring not only the findings of the index, but most importantly, what kind of values do the insights that have been surfaced actually hold for the investment community as well as policymakers. And bringing their voices and their insights and their experiences into this conversation, I'm joined by George Asante. George is with Barclays Africa Group, and in his role as managing principal and head of markets, he oversees the bank's markets business across the African continent, excluding just South Africa. And next to George, we're joined by Danae Kyriakopoulou, and Danae is a chief economist and the head of research at OMFIF. And in her area, she focuses on themes relating to central banking, to economic policy, as well as public investment. And closing our panel, we have Montfort Mlachila. Montfort is the senior resident representative for the International Monetary Fund, the IMF, here in South Africa. And he brings into this conversation as a macroeconomist extensive experience of looking at the macroeconomic opportunity for Africa. And perhaps we're all familiar with the regional economic outlook, which is perhaps one of the flagship outputs of the IMF, where Montfort played a key role in leading the analytical part of the production of this report. Now, we also have a live audience joining us here in Johannesburg. They're going to be bringing their voices into the conversation a little bit later on in the show. But if you're at home or you're on a screen anywhere in the world and you would like to participate in this conversation, you're more than welcome to do so. We are on Twitter today. Our hashtag for today is AFM Index, and that's African Financial Markets Index. We're also using WBS Talk, which of course stands for Wits Business School Talk. And if you want to tag any of the handles, you can tag OMFIF, you can tag Barclays Africa, you can tag at CNBC Africa, and of course you can tag me too at The Real Nozi. Thank you very much for making the time to join us. George, let's get right into it. I think the big question is, for Barclays, why be a key sponsor and invest in a financial markets index?
Thank you, Nozi. As Barclays, as a group in Africa, we're doing this as part of our stewardship value, which requires that we leave things in a much better place than we found them. And through this particular initiative, what we're trying to achieve is to try and drive the acceleration of reforms in Africa's financial markets, and to also drive conversations that will increase Africa's competitiveness and ability to price for investment into the continent. The other side where we want to take this particular initiative is to increase the openness and accessibility of Africa's financial markets. And probably lastly, we want this index, which is an independently calculated index, to become a platform for stakeholders within the financial market to put their minds together and discuss what Africa needs to do to really open up its financial markets for investment opportunities to flow into the continent, and investment opportunities of local investors and then international investors as well.
Danae, it's a huge list of expectations that George has put on the table: accelerating reforms, driving competitiveness, openness and accessibility of markets, creating a space for conversation that brings about change. Did the results of the index and what's actually come out in terms of the key findings match some of these expectations? And before you do that, maybe also just give us a quick snapshot of the methodology and how you went about getting the insights that have come out.
Mm-hmm. The index looks at 17 African economies, 17 financial markets. It's fairly representative of the continent. It's only 17 countries, but collectively they are 60% of the continent's GDP. So it's quite comprehensive in its coverage. It's also very specialized, looking at financial markets development in particular. There's a lot of indices out there looking at economic opportunity, looking at ease of doing business. This one focuses specifically on financial markets. Now, looking at the results, you have South Africa coming on top with a score of 92 out of 100. As you would expect, the continent's biggest and most developed financial market. And then there is quite a big gap between South Africa and the second country, which is Mauritius, with a score of 66. So that is quite interesting to us, that it is this very big gap between the first and the second country. And then there is quite a big cluster after that, with a lot of countries being in the middle. And the interesting question is, what happens there? Because there is only one way to come on top. South Africa comes on top on almost every indicator that we look at. But there's many ways to be in that middle cluster. And why is one country in position 9, which is Zambia, and another country in position 8? What makes those differences? They can be very good at some of the indicators that we look at, but not so good in other indicators. And the way the methodology is structured is that we've looked at 6 different pillars that we think are important in terms of showing the depth and the importance of development of financial markets. So we look at market depth. We look at the capacity of local investors, at the openness of foreign exchange, at transparency of the regulatory environment. We look at macroeconomic opportunity and the legality and enforceability of international agreements. So we think it is a fairly comprehensive list. And within those 6 pillars, we look at 40 indicators in total. And it's also a mix of hard data of, for example, how many products are available on the stock market, but also getting the opinion of the policymakers, of the practitioners in the stock exchanges themselves in terms of how they think the financial markets are faring. So it's a combination of quantitative and qualitative data.
So 6 pillars gives us a very nice focus for this conversation, and we'll try and unpack a little bit more depth around each of the pillars. But before we get to the pillars, Montfort, let me come to you, because I think the question of the timing of this index is quite important. Why is it important for us to be looking at African financial markets at this point? And maybe as a secondary question to that, what is the value that can potentially be unlocked by an index of this type, not only for the investment community, but what is the value for policymakers as well?
First of all, I'd like to congratulate the 2 teams, the ONFIF and Barclays, for developing this very interesting index, which fills a niche in the market, especially by focusing on the institutional aspects of financial markets. And one thing that I particularly like about it is it goes beyond just collecting a few indicators, but it is built on an in-depth analysis and conversation and discussions with the people who actually know the markets very well. And it focuses on one very important aspect, which is the issue of transparency. Transparency of data, transparency of policies, transparency of regulations. Those are very, very important issues to focus on. Why is it important at this point in time? Given the current economic conditions in the region, especially in sub-Saharan Africa, where growth was only about 1.5% last year and is expected to be only about 2.5% this year, any additional sources of growth are always welcome. And the financial sector is definitely well positioned to unlock potential sources of growth.
Well, let's get into those pillars, and I'm actually going to start off with the macroeconomic opportunity. So I'm actually going to start off and just stay with you, Montfort, because one of the pillars, of course, is looking at that opportunity. And if you're making the linkage to say, well, we actually need to see growth so that we can unlock the value that George is saying that we need to be accelerating towards. The index does a brilliant job of giving us a sense of where we are and how African markets overall we've seen growth weakening. But what is the prospect for growth moving forward, especially in the context of financial markets?
Clearly, the continent is facing a growth challenge, but I'm fairly optimistic about the future prospects. When we talk about growth, for example, in sub-Saharan Africa, 1.5%, it's important to highlight that it's driven largely by the 2 biggest economies, Nigeria and South Africa, which have been growing this year, for example, at around 1% or less than 1%. However, most of the other countries are actually growing fairly rapidly, decent growth of 4 to 6%. So the situation is not all that bad in all the countries. That said, of course, we can definitely do better. The continent can do better, and the financial markets and financial development more generally can unlock growth for various reasons. Strong financial markets allow for the mobilization of savings and for the efficient allocation of savings. They can provide opportunities, financing opportunities for the next innovative enterprise, which can obviously create jobs and create greater opportunities for the population. So those are some of the issues I think we need to discuss and focus in during the conversation.
You've touched on transparency, which is certainly one of the pillars that we're going to look at. But Danae, one of the other things that Montfort has touched on, he speaks about enterprise. And if we go to I think it's the first pillar, this is the capacity of local investors. We talk a lot about unlocking the potential of local investors by actually increasing the accessibility of finance and the accessibility of financial markets broadly to small and medium-sized enterprises. Let's go then and perhaps get a sense of what is it that needs to happen in the African context if we're going to see small and medium-sized enterprises having increased access to financial markets and really accelerating the deepening and the broadening of financial market access on the back of that?
SMEs, small and medium-sized enterprises, are the backbone of the economy, not just in African economies, but broadly worldwide as well. They are the biggest creators of jobs, of output. So they're a really important part of the business community in every economy. But they always suffer from access to finance, access to funding, because especially in Africa, where the banking sector is very concentrated and there is lack of information and transparency in terms of aspects of collateral, for example, a lot of banks tend to focus on bigger enterprises because it's easier, lower risk to focus on them and to lend to them. So a lot of the small and medium enterprises are excluded and they suffer from lack of access to finance. That's where financial markets, we think, can come in, because they have an additional source of funding, an additional channel through which they can raise finance. And we think that's very important in terms of supporting economic development.
Yeah, so I mean, just to add to it, I think one of the things the index actually also promotes is an African peer-to-peer comparison and the opportunity for countries to actually be innovative in how we look at traditional financial systems. So, for example, an issue that has come up through the discussions of the index has been how we prioritize blue chip companies having access to finance on stock exchanges in Africa. Okay, the concept that is coming up is why not deprioritize blue chip companies and rather prioritize small and medium scale companies. I mean, today, if you go to almost all the exchanges, there is a first list and a second list. The first list is for blue chip companies, which are very few in African markets. The second list is for SMEs, which actually dominate the market. Why don't you turn it upside down? So I think the index actually gives you such insight for Africa to actually leapfrog and come up with innovations that are contextualized and very relevant to the Africa situation, and not just to apply a cut and paste kind of approach.
But perhaps as an additional complexity, what you're saying, George, one of the things that the index though also picks up is that oftentimes the financial market players are under heavy regulation, and small and medium-sized enterprises to some extent have looser regulation and looser compliance, and because of that divergence we're almost seeing this gap where the prioritizing, as you're putting it, of blue chip companies actually comes first. So in your view, what would need to be the psychological shift or psychological game changer if we're actually going to see a deliberate push towards focusing on small and medium-sized enterprises and actually shifting away from the multi-tiered system that you described that puts the blue chip company right at the top?
So I think, I mean, the beginning of the conversation really is for policymakers and particularly governments and people with interest in the financial market to sit together and say, what is the problem of the continent? The problem of the continent is small and medium-scale enterprises having access to finance. Now, how do you leverage your financial system? I mean, the banking sector is one system, but there is also a huge sector, which is the capital market sector, which we can redesign I mean, as submitted earlier, redesigned to cater for the needs. And remember, I mean, an SME not having everything together, as you rightly mentioned, sometimes it's not because they don't want to have it. It's just how the system is structured. So how can you package a financial solution through the capital markets to be able to address and take advantage of that opportunity that we have in the market? So I think it starts with a conversation from the top of the house, which is probably the government,
right.
And then you have the banks who are part of the financial system, and then the companies themselves. And I believe that there is a strong opportunity there to actually transform the landscape of African financial markets by having such innovative discussions and approach to our situation.
I also want to make sure that we don't lose one of the other points that Montfort put on the table, and that was around transparency. And Danae, I want to quickly come to you with the issue of transparency, because we know that, especially when it comes to the regulatory environment, transparency becomes absolutely critical. From what we've seen from the index, are there pockets of excellence where we're saying, you know, we have actually seen regulatory transparency translating into actual transactions and actual deals that would otherwise not have come through this particular financial market?
I think it's exactly that. It's about investments that would not otherwise have come through, because the first step for an investor to become interested is the macroeconomic opportunity that Montfort was talking about, is the returns, the promise of returns, what kind of returns they can generate from a particular investment. But then if they cannot actually see the transparency, if the financial market that they want to invest in does not have that infrastructure, then the investment is not going to go through. So you need both sides. You need both the macroeconomic promising outlook, and you need the infrastructure, the transparency. And there we see some countries that have made a huge effort on that. And when we talk about transparency, we talk about, for example, how do the stock markets report on the transactions, on turnover and liquidity? Is that coming out on a regular basis? On the governments as well, when we talk about their budget, for example, does that come out on a regular basis? Can investors look out to these indicators in a certain framework? Does the Monetary Policy Committee of a central bank publish its minutes on a regular basis again? And some countries have done a lot of effort there. Mauritius is an example. Nigerian Stock Exchange, again, publishes its data quite regularly, and this came out quite strongly in the survey that we ran of market participants.
So data becoming almost a central focus in the conversation. And so Montfort, I mean, you work with data and data across the African continent, but one of the things that I think the data has also shown us from the index is that there is a gap that exists between international standards and international regulations and what we sometimes have in African markets, and to varying degrees. What are your views around how do we ensure that there's increased compliance with international standards? And is your view that that's what we should be focusing on, moving from local standards and local compliance and investing in international standards and compliance?
As I indicated at the beginning, there's no doubt that greater transparency, especially of the data, is very important. And more fundamentally also, the continuity of the data over time is very important, and I would, I'm sure, have a discussion on this. I would urge also the continuity of the index so that people can actually see how the data is evolving over time. Our country is improving or getting worse, and so on. So it's absolutely crucial to have very transparent data. I mean, the IMF is a major producer of a lot of macroeconomic data. So hopefully your index is actually using that, which is, I hope it's doing that. But obviously there are some statistics which we don't necessarily produce, because they are mostly based on what markets produce, and the extent to which you can have direct access to those indices indicators is also very important for not just for the markets but for the global population. And especially the policymakers.
Danae, you want to get in?
Just to come into that, absolutely, we're using IMF data. And also, absolutely, we want to have the index updated on an annual basis. We want this very much to be a practical tool for investors, but also for policymakers. We want to track the progress of different economies to see why are they moving ahead, why are they moving up the ranking, what can other economies or financial markets look in terms of successful reforms that have been implemented, quick wins that can help help them really see change. But also to go back to your point about the implementation of international agreements, I think absolutely it's crucial. It's crucial to have harmonized implementation, but we also need to be careful in terms of the cost of that implementation, because with limited resources, it's about prioritizing the right kind of reforms, and maybe moving from, say, Basel I to Basel IV can be absolutely desirable, but it can also be very difficult, and maybe those resources could have been spent better elsewhere. And that's what the index is trying to do, is trying to pinpoint what are these easy, quick wins that different economies can seek in order to improve their financial markets, because it might be that it's not the right time to implement those international agreements now, but this is something that will come after the other steps. So it's about sequencing as well.
So it's about sequencing of global regulations, but George, there's also, of course, just the general issue of the capacity to enforce agreements and the capacity to enforce any legal agreements that have been entered into. What is the state of play in terms of how we're doing on that front in African financial markets? And should we, at an enforcement level, be looking to accelerate towards international norms and standards? What are your views on that?
So, I mean, if you take, you read the reports, it's actually found out that about half of the countries that were assessed in the index have enforcements of legal agreements within the financial market. And the other half actually don't have any strong regulatory or legal regimes to enforce financial market documentation. And what that breeds is mistrust in the financial markets, because a lot of people are entering into agreement, but they are not sure of the final resolution or a potential final resolution if an issue comes up within the contract that they've entered into. So that is very critical for your financial markets to actually move on, and for people to respect contracts and have trust in the system. Your legal regime will have to support it. And as I mentioned, I think a couple of countries have actually made a lot of progress. So I can cite a country like Kenya, where as part of the whole financial sector reforms, they passed laws to enforce financial market documentation for anyone who enters into an agreement. And we've seen that actually come through in countries like Botswana, in Namibia, in Mauritius. But we still have a whole set of countries that don't have legal regimes that 100% support financial contracts. And I think that is something that is a revelation in the index, and we need to work on.
So a huge insight that has come through. And Montfort, I'd be interested in getting your sense on this in particular, because we know that investors want to be able to deploy, and they want to be able to repatriate capital with as much ease as possible. And so, in your view, do you think that we're finding it's almost a three-way balance? There's a balance between market protection and market openness, but also there's the balance that the point that George is making is that having a framework that actually works. What are your views around how we're navigating that particular space?
Clearly, the availability and easy repatriation, the availability to foreign exchange and easy repatriation of foreign exchange for investors is a very critical aspect for the development and ease of doing business in a particular country. Clearly, one of the challenges that a number of countries have been facing over the past few years in Africa has been the shortage of foreign exchange due to notably the very sharp decline in commodity prices, especially among the oil exporters. As as medical school students, are often taught, first do no harm. So countries should avoid shooting themselves in the foot by implementing excessive administrative controls, which just benefit a few people who have access to subsidized foreign exchange, and create in turn creates parallel market, which are obviously not very productive for the economy. So I think those are the kind of issues that countries should really pay attention to.
So lots of issues coming up, but I do want to go back, Danae, and maybe even talk about market depth once again. because one of the findings from the index as well is that we've got to actually look at domestic policy. And what we often find in the African context is where government policy looks to improve or increase the participation of local players in the market. And there seems to be a bit of a conundrum on what the impact of that. So what is the impact of policies like black economic empowerment in South Africa, or nationalization in Zimbabwe, or as the index picked up in Namibia? What is the impact on that in terms of market depth, the increased participation of local players? Does it actually lead to market depth, or does it become a deterrent to investors who see this as an additional layer of compliance?
I think the answer there depends also from what point of view you're looking at it. It might be that these are policies that are well-intentioned and are serving specific goals other than the deepening of financial markets. But in terms of that particular outcome, in terms of how they affect financial markets, what we found in our research is that they can actually be quite detrimental. So the example of Namibia that you bring up, the law was saying that 25% of businesses need to be with black Namibians, and 50% of the top management need to be from previously disadvantaged groups. Now, what came out in the survey is that there is actually not enough people to fill those positions, not enough sufficiently qualified people to fill those quotas. And so what you end up with is that either the market is not able to respond, or that some businesses leave the market altogether and deploy their capital internationally instead, which does not serve the purpose of the policy that might have been well-intentioned from the beginning. It just doesn't work in practice.
So we've got one more minute before we have to go to break. So a very quick one, George, linking up on the point from Danae with regards to local investors looking for international opportunities. What are the overall findings around whether local investors are actually finding more opportunities in international markets versus domestic and regional markets? And I'd be really keen to also get a sense of the pension funds as players in the local market and how they then color the landscape of the local financial market.
So the base is that for most of the markets which the index focused on, we realized that the participation of the local investor base was quite minimal. But local investors are quite critical in the development of any market. Number one, they help in mobilizing local resources. They help, as Montfort said earlier, they actually help in pricing local assets properly. And the index actually found that there is opportunity for Africans to bring home money that they invest outside the continent if we are able to build an all-inclusive local market where there is product diversity, risk is properly priced, etc., etc. So I think there is a huge opportunity for Africa to actually mobilize a lot of its resources that it needs from local investors who may not be investing because they don't have confidence in the local market, or who actually have their monies outside the continent. That is a significant opportunity that we need to also start working on.
Well, opportunity, opportunity, opportunity. I think this has been the dominant word in the first half of this conversation. We're going to take a short break, but when we come back, we're going to be hearing from our live audience here in Johannesburg. They're going to be coming through with some of their questions and comments. And of course, we'll also be taking your questions and comments from Twitter. So it's great to see that a lot of these have become started to filter through. We'll see you in 2 minutes.
Gain insights into 17 financial markets across Africa with the Barclays Africa Group Financial Markets Index. Know no boundaries and prosper. Gain insights into 17 financial markets across Africa with the Barclays Africa Group Financial Markets Index. Know no boundaries and prosper.
Welcome back. If you've just joined us on the special CNBC Africa broadcast, I'm Nozi Pombandra, and we're at Wits Business School, where we're having a conversation that is really exploring the opportunities and the challenges for African financial markets in the context of deepening and broadening these markets for local and for international investors. The first half of our show has really focused on opportunity, opportunity, and more opportunity. And as we're bringing your voices now, we see where the conversation takes us. I kick off off with a comment that actually comes from Mzinga Mwelu, who is in the audience. But one of the comments that she makes, she says, opportunity for Africans to participate and bring money home. And this is why local investors are important in any market. And so, Peter, I'd like to maybe throw a question to you and then open up our conversation in the context of the tweet that we've heard from Mzinga. What are the benefits for the continent? And in particular, of course, I think everybody in the room is aware of the journey of Barclays Africa Group and the broader conversation around that. But what are the benefits of focusing on developing our own financial markets at this time?
Nazipa, what we clearly understood some time ago was that we were witnessing a trend where a number of the global banks were beginning to de-risk themselves and they were exiting our markets. Yeah. And it started a conversation around what does that mean for our long-term development as a continent, etc. And how do we make sure we make ourselves attractive? We've looked all over the world, and Asia is perhaps a great example of sophisticated, deep markets that have attracted capital over time that's allowed not only large blue chip corporates to grow at a particular rate, but those middle income, middle market SMEs that have driven that growth over time. And so together with George and a number of colleagues and with OMFIF, of course, we said, well, how do we create something that enables regulators, ministers of finance, i.e. governments, and other market participants to have a set of principles that can guide us as to how we begin to put in place policies and therefore create that enabling environment to attract global capital, but also to drive, as the panel had said, local domestic capital.
Right.
We think that changes our destiny because it once again comes into our hands as opposed to being at the mercy of someone else. Now, clearly, we will always partner. So that was one of the clear strategies, certainly as Barclays Africa, together with OMFIF, we really want to enable investors and others to drive that growth with us in order for us to succeed as a continent, I suppose I should say.
So owning our own destiny and driving the growth from a local base. Let's hear what the other questions have in store for us. There was a hand. Yes, please can I have the microphone very quickly. Second row, gentleman in the second row. Thank you very much, sir.
So my question was that I heard about 17 countries being part of the initial list, and they represent, in my mind, the large countries in the continent. And you are obviously trying to create an opportunity for small and medium-sized enterprises. So for me, the remaining countries become the small and medium-sized countries. So what would enable them in the future? And would you have a criteria to delist a few countries and add a few countries in the future? And if so, how?
Fantastic question. Let's take two more before we come back to the panelists. There's a hand in the third row, and then I'll come to this side of the room. Let's take that question there, sir. Please go ahead.
Thank you. My name is Salman Khan from HTA. I got a question for Diane. Is any market economy underpinned by the political stability? And I see that you have discounted the political situations or stability as a pillar. If you can please brief why you discount it. Thank you.
Thank you very much. That's a question to Danae. Can we get a quick microphone to the front, to the madam sitting right here in the corner? Thank you very much.
Hi, my name is Duduzile Ndwandwe, founder and CEO of Akiti Project in real estate. I deal a lot with investors in the space, and my concern currently has been the emerging of the cryptocurrency, Bitcoin, and we have investors that are very skeptical and not even sure as to the market is going. And we have policies that are placed in by your organizations talking about microbusiness. I think the narrative of microbusiness has literally changed from the tradition of what we thought microbusinesses are. People are now literally trading on the stock market by themselves. Is there a danger? Are we actually going to be in a financial crisis sooner than we think?
Sure, big questions, Duduzile. A lot of danger, crisis, red flag words coming through in that question. But Danae, let me give you an opportunity to respond, because I think both the question that's come from Rakesh and from Suleiman really speaks to the approach and the thinking behind which countries to look at and which countries not to look at. So let me give you an opportunity to respond.
Yes, so in terms of the markets that we chose to address, we haven't just focused on the big and deepest financial markets. For example, Ethiopia is one of the countries that we look at, huge macroeconomic promise, but does not even have a stock market. So we wanted to have a representative selection of countries. This is the first time that we're launching the index. It is the inaugural one, and we plan to update it on an annual basis, eventually covering the whole continent. That is our ambition, but we have to start somewhere and also road test it. So that's why we're coming to all of the individual markets now. We started in Zambia, we're now in South Africa, to see also what the reaction is in terms of the market players and how we can improve it, what kind of other things we can include to it, and what next countries to extend it to. So it's very much the plan to go to the small and medium countries as well. In terms of the methodology and the pillars, as I said earlier, there are many indices out there looking at macroeconomic opportunity, ease of doing business, transparency, political stability. We wanted this to be very focused on financial markets, and that has been our approach. It has been a very detailed analysis of financial market development, and we know that it doesn't cover everything. We know that there is things that are important to the development of an economy that go beyond financial markets, but this is just a small part of the growth story, and this is our niche. So that's where we have concentrated.
Fantastic. And the question, and maybe let me give it to you, Montfort, and you can take a bite of it as well, George. The question from Duduzile around cryptocurrency and the dangers that this represents, and of course, because of lack of regulation and all sorts of concerns around Bitcoin and other cryptocurrencies. What is the thinking around how cryptocurrencies fit into the broader financial markets state of play?
History teaches us that believing that this time is different is probably a bad idea. And hopefully it is different, but we need to be prudent. The global financial crisis showed that even what we thought were well-regulated capital markets were not quite up to scratch, and there was significant shortfalls. Cryptocurrencies do have some technological aspects which are clearly very useful in terms of increasing tractability of transactions and making them more secure, and they can definitely be adopted by existing financial institutions and financial markets, but they do have some downside risks which, as of now, frankly, nobody really knows what those might be. So a clear understanding by the regulators of how these cryptocurrencies work is an important first step.
So, George, clearly regulators having to be aware of how they stay ahead in terms of cryptocurrency, but as a bank that is steeped in innovation and being ahead, what is the approach to cryptocurrencies?
So, I mean, if you bring it to the context of the index, I mean, what we're looking at is how pragmatic regulators are. That is something that the index actually tries to capture. And talking about cryptocurrencies and Bitcoin, maybe the broader theme really should be about blockchain technology and how do you use it as Africa how do you leverage on it to leapfrog on some of these initiatives we're talking about. And that is something that is tracked by the index, and it's something that we're going to watch quite carefully because some of the things are going to evolve.
Yeah.
And as we've seen in Africa, I mean, there's been regulators who are actually very pragmatic and some policy makers who are quite pragmatic. So we've seen Nigeria, for example, have a diaspora bond, and it just came up like that. Policymakers came together and they put it together. We've seen Kenya where there is Makiba, which is a broader kind of investment opportunity. So what we will be looking at going forward is how do regulators and policymakers and market participants like us, Barclays, who are quite innovative, use blockchain technology to leapfrog and create opportunities on the continent from a financial market perspective. So I think that is really what we're looking at from this index perspective.
If I may add one more thing, this kind of technology can also improve, for example, some of the ease of doing certain transactions, especially remittance transfers, which in Africa are the cost of remittances in Africa is the highest in the world. Yeah. And some of these technologies can definitely facilitate the reduction of the high cost. typically, if you send $100, for example, you typically in Africa you spend something like $10 to transfer money from one country to another. And this kind of technology can facilitate the reduction of these costs, and it can also facilitate, for example, some of the new requirements of the regulators, for example, the so-called know your customer regulations. With this kind of technology, it's much easier to know your customer, because it's if you can put all the necessary information online and in a secure manner, you can more easily track people's backgrounds, for example.
So clearly technology coming through as an enabler as we talk about deepening and widening financial markets. I've got more hands from the live audience. So I've got 2 hands. So I'm going to take Madam. I'm going to take a question here, and I'm going to take you, sir. So can I quickly get the question here to the front? Thank you very much.
Thank you.
Yes, it's on. Please go ahead.
Thank you. My name is Abna from Barclays. So for me, this index is brilliant and definitely would help transform our financial markets on the continent. I think my question is more around collaboration, and how do we drive usage and relevance? Because clearly, I think all our participants spoke about the fact that we need collaboration across various stakeholders. And bringing it home to the banking sector, is there a risk that this index could be perceived, as just being an initiative of Barclays, and how do we get other participants on the market to buy into it and drive usage?
Fantastic, thank you. So how do we ensure that we build collaborative partnerships that lead to greater ownership of the index? There was a question here. Thank you very much. There were 2 hands, I'll take one. So you go ahead.
Thank you very much. Mizenga Melu from Barclays, Managing Director, Barclays Zambia. We've seen South Africa has done really well in the index. I think South Africa and one other country. What should the other countries be doing to emulate the results that South Africa has done?
Thank you very much. Can I get a non-Barclays person for the next question, please? Right, so the gentleman there is non-Barclays. Thank you very much. We have a lot of enthusiasm from Barclays, clearly, but let's take a question there. Sir, please go ahead.
Yeah, my name is Oro. I am a PhD student researching on capital market development in Africa. I'm in Wits Business School. I have 3 questions. Number 1, the depth of the market. The book says that prices in the market are in African market, the securities are not well priced. And we see that movement in exchange rates are not priced into the prices of securities. And therefore, somebody's bound to be cheated in the price or having gotten the asset. We have not talked about it in our index.
You've got 10 seconds left for your 3 seconds.
We have not talked about that. Yeah. Number 2, SME. Access to financing. The book says that proximity is still important. In other words, proximity, most of the companies that are listed on the market are just around where the stock market is located. Are we not thinking of regional, stock exchanges? Because it's relevant in UK. Research has said so. Number 3 question is, nobody talks about integration, the market integration. Is it not relevant for the development of the financial market?
Thank you very much. Thank you very much, Mr. Oro. I'm going to take one more before I come back to the panel. So let's get the question from the gentleman there. Yes, go ahead.
My name is Mwamba Ngumbwe from Wits Business School. My question is, how has forward guidance from the major central banks helped curbing volatility in African financial markets?
Can you just repeat that? How is forward guidance?
How has forward guidance helped in curbing volatility in African financial markets?
Thank you very much. Fantastic. Thank you. We've got a really good, strong set of questions. Maybe let's start off on the last question. I'll bring it to you, Danae, because I know that you look at the role of central banks in the context of financial markets. So forward guidance, to what extent has it enabled the capping of volatility in financial markets?
I think the practice of forward guidance globally and in the African continent as well has been quite successful in terms of guiding market expectations of what policy could be, and that helps with managing volatility as well, because it is about not just about having the right environment in monetary policy or even in tax policy, if we take it to governments as well, it's also about the stability so that investors can know that if they come into a market, they know what to expect. And that goes back to what we were discussing earlier about the rules and regulations, that when you have too fast progress or you're trying to get from a very low level to catch up quite quickly to a very fast level, that might also be counterproductive because then you can move too quickly and that can create volatility that investors do not like.
Go ahead.
So just a quick one to add to it. I think, forward guidance is working, especially where there is a monetary policy rate in place, etc., and then the central bank actually give that guidance to the market. What we found across the continent is really not about the guidance, it's about the transmission mechanism. And through the transmission mechanism, one of the things we discovered in the index is actually a very weak money market where the transmission of the central bank actually goes through. So that is an important thing under the market debt. And I think the index has given guidance and insight on how we can fix this as a continent, because without that transmission mechanism, any guidance to the market really doesn't work. It becomes a talk. So I think that is also one of the things that the continent really has to focus on in the next phase.
So let's stay with you, George, because Bena's question, I think, is quite important, and that is the thinking around deliberate collaboration and partnerships, so this does not just become a Barclays Africa Group property, but something that can be collectively owned with multiple partners. What is the thinking there?
So absolutely. I mean, this index is really for the continent, and we encourage all participants and stakeholders within the financial markets to actually have conversations around it. And there are two levels to it. The first level is the independence of UMFIF coming in as the research partner. So Barclays really doesn't own the index itself. It's branded by Barclays, but it's for the market. I think that is critical, and it's contractual, etc. So this is really for the broader market, and we are hoping that other banks, other financial institutions, policymakers will actually embrace it from that angle.
So Montfort, I'm going to collapse Mr. Oro's three questions into two. One of those questions, of course, you're speaking about the opportunity to look at regional financial markets more in the African context. And then you also asked a question around, well, shouldn't we be talking about integration a whole lot more? So thematically, I think they go together. What are your views or your response to him in the sense of the extent to which we are actually putting on a regional lens and using integration as a mechanism to move in that direction?
Regional financial integration is very important. It's an issue I personally have actually been working on quite recently. It's important because by nature, most financial markets in Africa are very, very small. So you need to have a bigger market in order to attract especially external investors, and also for example, local governments, for example, to be able to issue bonds on their own domestic market is not quite enough. So, for example, we can learn from the example of the West Africa Economic and Monetary Union, WAEMU, which has a regional stock exchange, for example. It's BRVM in Cote d'Ivoire, in Abidjan, which allows for the issuance of various securities on that market, and at the same time, regional governments in the region are able to issue their own bonds for the entire region, to buyers within the entire region. So that expands the availability of financing for governments.
Absolutely, and then maybe just to get your thoughts as well on his first question, and this is, bridging the gap between the pricing of assets versus the information or the data that is available. I think we spoke about this, but a final thought from you in terms of how do we make sure there's a closer alignment between valuations and the pricing of assets and the data that is actually available?
I'm not an expert on pricing of financial securities, but clearly availability of transparent data, for example, on exchange rates is a very important one. If you have parallel exchange rates, for example, you have 3 exchange rates in the market, it obviously makes it very difficult to price assets. For example, in the case of Nigeria, you have had divergent exchange rates in the past. Now there's greater harmonization, which is obviously good, but clearly not having a single exchange rate, for example, is a bad. It makes it very difficult to price assets appropriately.
And of course, this feeds into the conversation of the regional perspective and the integrated perspective. And I think Mzinga's question then becomes very important as we begin to wrap up this conversation. If we've started off with the conversation by saying, well, the index reveals that South Africa sits with the highest scoring, the question then becomes, well, what should other markets be emulating or looking at to be able to emulate what South Africa has done? And Danae and George, I think you'll both take a stab at that. Danae, you can go ahead.
There is a very big gap between South Africa and the rest. I think that is justified by the longer period it has had in terms of developing its financial markets. So we don't expect other countries to catch up immediately, but we do hope that the index is shedding some light on which particular pillars and indicators they are doing less well on, or they have room for improvement, and what are the areas for them to catch up on. We mentioned earlier the use of technology, of fintech, of blockchain. Making use of such innovations can allow some countries to even leapfrog and pass some stages of development for their financial markets, to supply greater financial inclusion, and to also focus on these particular quick wins that might be the transparency of foreign exchange, not having parallel exchange rates, for example, allowing investors to get what they see in advance before going into a market to invest. We think these are all very important aspects that maybe South Africa has got right over a long period of development, and then other countries can emulate. But there's also a risk to South Africa slipping down the rankings. So we shouldn't see it as being at the top, and it shouldn't become complacent that it's so far ahead of others, because it's also about not comparing yourself to the other economies in the region, but doing the best in terms of its potential. So it's 92, it's not yet at 100, so we hope that next time we're here next year, it will be at an even better score.
George?
I think the way South Africa did it, which other markets are beginning to actually copy, is to bring structure to financial market development. And I think that is what the index actually offers, that the discussions around market development cannot be scattered. It has to be brought together, because the markets are dependent on each other. When you have a strong money market, you're going to have a strong bond market, a strong equity market, etc. There is that strong interdependency. And I think that is what South Africa actually did very well. Structure the conversations, let people of like mind come together, have a discussion, agree, follow through. I think that is one thing that South Africa has actually done very well, and other markets are encouraged to pursue.
I need to add a caveat that financial development and development of the markets in and of itself is not a sufficient condition for growth. And the proof South Africa is on top of the index, but South Africa doesn't have very good growth. For the past few years, we have seen South Africa actually going down in growth. So it's important, it's an important ingredient, but it's not a sufficient ingredient. Research does show, that we have done, does show that a lot of countries who are starting at a very low levels of financial development have much better expectations, if you want, in terms of having greater growth arising from greater financial development. Countries which are very highly developed, like in financial at least, like South Africa, the payoff from more financial development is quite negligible. So we need to be aware of some of the caveats of such indices. Even if you are on top, it doesn't mean that your growth is going to be great. I wanted to add that point.
I think that's very relevant, and actually speaks to one of the tweets that we received from Priya Roji, who speaks about the importance of peer-to-peer comparison. And I think as you speak, we're not just comparing on a linear platform. We're also looking for the caveats and the depth in the insights, and that's what's come through strongly in the index. We are 2 minutes away from wrapping the show, so I'm going to actually do all my journalists and the media that are watching this a huge favor. After a conversation like this, we all want a big headline that we're going to put either on the 7 p.m. news or put on the Sunday papers. And so as we wrap up the conversation, I'd like you to think about the headline around African financial markets that you think should be on the business pages of the Sunday papers. And I'm going to step out of it, and I'm going to allow George to go first, and I'm going to work my way around. And remember, George, it's not an editorial, it's not an executive summary. It's a headline, right? So it's a headline that has to have African financial markets in the subject.
So I think Africa has a great opportunity to actually excel. And there is a big component that is missing, and that is financing from the financial market. And we need to get that done.
Africa needs financing from the financial markets, right? So that's our first headline. Sunday papers, I hope you're watching. Yes, Danae.
I think financial markets development is a necessary ingredient for the next stage of Africa's development.
Financial market development is the necessary next step for the development of African financial markets. Again, we're still working on half a page, but we'll get there. And finally, Montfort, I'm hoping you're going to give me a headline.
This time is different. Hopefully it'll be for the better.
I could not have ended the conversation on a better note. This time it is different. Let's hope it is for the better. Thank you so much for making the time to join us this evening as we are talking deepening and expanding African financial markets. And of course, this on the back of the recently launched Barclays Africa Group Financial Markets Index. Thank you very much for all of those who participated on Twitter. We have been trending for the last hour. Thank you for bringing your voices to the conversation. A big thank you to our live audience from Johannesburg. And from myself, Nozi Pombandra, it's good night.
For insights on 17 financial markets across Africa, read the Barclays Africa Group Financial Markets Index 2017. Know no boundaries and prosper.